At IBCanada Group, we are your complete and independent source on the infinite banking concept, serving Canadians from coast to coast.
We get to have a conversation where we get to actually discuss potentially some of the things that infinite banking can't do.
Because we do. We talk about all the problems it solves a lot of the time. So let's dive a little bit into some of the problems with the infinite banking concept. Before we go there, what would your definition of the infinite banking concept be?
An ability to solve problems that you're not even aware of.
Right.
That is, first and foremost, in the financial planning model, there are an awful lot of problems that are going to rear their ugly heads at a point when, unfortunately for Canadians, it's going to be too late to solve them.
That's the engineering term I kind of give it is a way to recapture the interest that you would have given away to the banks or other lenders using a properly structured whole life policy. So a dividend paying whole life policy. But let's dive into some of the problems, because the infinite banking concept has been around for a long time. Whole life insurance has been around longer than Canada's been a nation. So it's nothing new. I guess, why isn't it more of a household name?
If implemented, it takes money out of the banks. It takes money out of financial advisors' control. It takes money out of the financial services industry's coffers. And that is predominantly where 99% of the money is held. So if it's now going to interrupt their bottom line, they're not going to want you to know it. And eventually, and we can understand this in the current political environment that we find ourselves in, that a lie told enough times eventually becomes the truth.
And there is a lot of truth to the truth to that. And we talk about a lot about, okay, so the infinite banking gives you back control. What would you say is a problem with the IBC or infinite banking concept?
If we had a penny for every time we heard this, we would be able to really fund our infinite banking policies correctly. If this is so good, how come I've never heard of this before? Right? How come everybody's not doing this? Right? It's if you are told to do something a certain way and everybody else is doing it, and something new comes across your desk, you're not going to pay any attention to it because it's working over here. And the problem is, financial planning as we know it today did not come into existence until the late 70s, early 80s. At which point, that was from a demographic perspective, the bubble. That is when everybody that was born from 45 to 64 were heading into their beginning of their careers and into their peak earning years.
And when you mean financial planning today, what do you mean exactly?
Well, back in 1975, and you can do some Google searching on this, the acronym INRISA changed the financial landscape from prior to that, everybody essentially working for a company, having a pension plan, a defined benefit pension plan was commonplace in Canada and in the US. If you did any type of investing, there were very few mutual funds that were available, and there were no ETFs where you could just buy the index. So the wealthy were the only ones who really invested in the stock market. Now, everybody from the age of 14 days old can have money put away in the stock market for their education or their retirement or saving up for a house, etc. So almost nobody was in the stock market. Everybody bought GICs, had a bank account, had permanent life insurance, and then suddenly it all shifted. And now everybody who has a heartbeat seems to think that the stock market's the place to be, because the narrative changed from those who controlled the money. get it out of the safe where they couldn't control it because you locked it away, and now have it liquid where they control it. And I mean they, not the individual, they, the 1% that control the money, could now have access to all that money to make money off of it with some sort of down the road, we hit 65, knock on wood, there's more money than you put into it.
Yeah, the magical age of 65. I guess that's one of the problems I see with the infinite banking concept is the stock market. You mentioned the stock market. It's so emotional, right? And that's one thing I learned. It took me about 2 years to learn this in the financial industry, that money is not necessarily just math. It's very emotional. And the stock market, it's almost like a roller coaster ride. It can be extremely fun, very scary. What I personally learned and try to teach my clients is the ups are never enough and the downs hurt so much.
Yep.
And it's just human tendency. We all know we're supposed to buy low and sell high, but even the brokers tend to do the difference because there's so much emotion involved, and we make all our decisions based on emotion. Where you get this infinite banking concept, it's kind of like it's just a steady eddy. There's no downs. It just continues to grow. So it's a word. It's not as fun.
It's called boring. It is called boring. Pure and simple, it is boring money. But I will be more than happy to be boring with my money. And we were chatting off air about the roller coaster ride. And when you sit in the chair in that roller coaster and nothing is happening, it's damn boring, right? But then they put the belts on you, or the big, harness comes over top and all gets locked in. It's still boring, but now you're really safe. The infinite banking concept, what you do with your money is sitting inside of the whole life insurance. That's it. You're sitting in that roller coaster and you are completely safe and secure and tied in with no risk of loss. But it's what you decide to do with the money that can create the roller coaster for you. And that's important. So yeah, I'll take the boring, I'll take the safe, I'll take the secure, and then I get to decide what I want to do with the capital that I create.
Yeah, you could make life a lot more entertaining and more interesting if your money's being boring. That's a good way to look at it. Another problem I see, and you mentioned it. So one of the problems was, sometimes you just can't change people's mind. They've done one thing. That's the way they're going to continue to do it. We've kind of talked about that it's boring. You mentioned insurance and term. Yeah, there was that catchy slogan, buy term and invest the rest.
Yep.
That seemed to
which happened after that, and RISA came in because the stock market, Wall Street, needed some sort of marketing slogan to get people to shift away from the safety of permanent life insurance to and the cost, because back then the design wasn't available the way it is today. So you were buying life insurance as a death benefit, and therefore it was more expensive. So as soon as you could offer somebody life insurance as term insurance, which is a whole lot less expensive, people are going to gravitate to it. And the phrase, we know the price of everything but the value of nothing, really is exploited in that example, where term insurance is cheap, we know the price, but the value is 98% or more of all term insurance never pays a death benefit, because by the time you hit 65, you've canceled the insurance.
That's right.
And that age 30 to 65 is a time period when you are least likely to die. That's why the term insurance is so cheap. It's not because the insurance company is giving you a deal. They priced it based upon the risk.
So I used to be a fan of that term before, buy term and invest the rest, because I did when I was starting in the financial industry, I was introduced to whole life, and the way the numbers worked, I was like, this is awful expensive just for a death benefit. I want to be able to use my money while I was alive. It wasn't until I was introduced to the infinite banking concept and dove even deeper into different insurance policies, seeing that you can really structure it properly where it's not expensive. You can have it for your whole life, because who's kidding who? And I hate to be the bearer of bad news. We're all going to die one of these days. So you can pass on that legacy to your loved ones, or you can have a big statue of yourself, whatever you want to do. But you can use that money while you're living very, very efficiently.
Yeah, exactly. Right. One of the other problems is that it is an insurance policy. So unlike any other retirement plan, this one, first and foremost, is based upon health. So there is a potential where somebody is not insurable, but we have the ability to still utilize the concept on anybody else in their family, in their bloodline, where there's an insurable interest.
Right.
So insurance can be on children, on spouse, brother, sister. They're not going to be the same size of policies because there's less of a financial interest on your brother than there is on your spouse. But these would just be the small little micro, branches that you would open to be available for you to still deposit your money into, even if you were not insurable.
Right. So one of the problems is that it is an insurance product. So it's based on, if you want a properly structured dividend paying whole life policy and you're in bad health, you're not going to be able to get this. But you just mentioned you can actually have it set up for a family member and utilize it that way.
Yeah. And it's what the Rockefellers do, right? It's insurance cascade, where they just keep having insurance policies on everybody. And the grandparents, as soon as a child is born, open up an insurance policy on that grandchild and start transferring the estate intergenerationally to that child. And you think, well, what financial, how is a child even eligible for insurance? And then what is the reason for doing that? It is literally the ability to pay it forward, that estate, tax-free to that child. And eventually they have so many of these individual little banking policies set up that individually they're small, but collectively they're called a family bank. Right. And that's why they are still one of the richest families in the world and have held on to that money for over 100 plus years.
Just passes on tax-free to generation to generation to generation.
Yeah.
Okay, Scott, what's another problem that you see with IBC?
It can be looked at by financial entertainers as a be-all and end-all solution. And the interesting thing about math, and you'll know this, is that I can give you 3 numbers and you can give me 6 different answers, right? It's still math.
Yeah.
So to the uneducated, which almost everybody out of the 37 million plus people in Canada are uneducated when it comes to this concept, that it can be really sexy illustrating it one way, but that's not the real world scenario that it's actually going to be able to live up to. And we find that as a huge problem, that if you're going to come out with a concept that is vitally important, that every Canadian readjusts their financial DNA by inserting infinite banking into it, that it's done with the right philosophy. And that's a philosophy that we are very adamant about getting out there to educate people regarding that problem that they're not even aware of.
a lot of people are not even aware that there is a problem.
Yes. And
Yeah.
in looking for the problem or looking for the solution, they might be going down a path which will help them. It's just not as efficient as it could have been.
Right. And
So
I guess,
something is better than nothing, right?
yeah, that's one of the problems I see. You're right. A lot of advisors or the banks, they don't talk about this. And then the very few advisors that do talk about it usually make it very insurance heavy, right? So
Yes.
it's not a cost effective to the client. And there's more than one way to peel a potato. And you can actually make this very, very efficient and very inexpensive. But why don't most advisors do that? I would say only 10% of the 10% that talk about whole life actually set it up the way that the members at the Infinite Banking Canada Group do.
Because you really have to be willing to take a dramatic cut in compensation. So we all know if we look at a specialist, anybody who is a specialist in their field are the ones who earn the top dollars. We are specialists in our field, but we're willing to flip that upside down and actually reduce our compensation to ensure that the vast majority of Canadians, one, can implement this concept. Two, we only have so much money coming in the front door. And if we can recapture as much of that as possible by lowering our compensation, having that money go back to you, isn't that just in the best interest of everybody? We get the concept in more people's hands. More people get to use it, control the banking system. And I like to think of it as, you ever heard of the McDonald's principle?
What's McDonald's principle?
You can make $1 off of 100 hamburgers, or you can make a dime off of 1,000, right? Lower the costs down, have the volume, because people will appreciate what you're doing in the value, and get the idea out there into as many hands as possible.
Yeah, I look at it more of I've been lucky enough to travel, and I've seen what money can actually do to communities. Communities that have a lot of money seem to have these beautiful hockey rinks, beautiful parks. There's a lot less stress out there as long as they're focusing on the right things. And I find when the infinite banking concept is set up properly, where it gives the client control and flexibility of their own money, that's going to give them ability to make their communities even stronger. Communities where we can raise our kids and add to the prosperity instead of having to worry about taxes and losses and all that. We can actually focus on what's really important.
Exactly.
And if the policy is not set up properly, it kind of gets rid of a lot of those benefits that we've been talking about.
And it's not that the policies are not correct. They're just not as efficient as they could have been, as beneficial to the client as they could have been. And you're not going to know that unless there is an alternative that you were shown or that you can look at, or an alternative group like ours where you can have that conversation and say, hey, I was shown this, I was given this as an option. And we all know in the investment side, hey, are you willing for a second opinion? Right? Right? And then now that you are fully armed with education and you can see both sides of the coin, you can choose what side you want to be on. And it's all about giving back as much information as possible. And we will never hide from a question. We want you to ask those questions, because if you do ask those questions, guess what? It's because you understand the concept.
Awesome. So to recap, before we recap, is there another problem of infinite banking that pops to your mind?
It's literally, even though it is for everyone, it's not for everyone. Unfortunately, there is a very large portion of the population, no matter what country you're in, that financially are just scraping by. And it's one of those where you have to have capital cash flow to be able to start capitalizing your system, putting money away. So for those people who can't afford to do RSPs or TFSAs, or they're trying to save up all their money for the down payment of a house, or they're just stuck between a rock and a hard place. No matter how great this concept is, sometimes it's just not something you're going to be able to get access to.
Thank you for saying that. And you're right. It's very powerful when used properly. And when you have the ability to do this, it's a game changer. But you have to first have the ability to do it.
Right. And I've had conversations where I will educate people. I call it like my pro bono work. I know that they are not financially available. And I'm not talking about the fact that you have to be earning six figures. I'm just talking about the fact that you have positive cash flow, right? Can't really help somebody if they've racked up $80,000 in credit card debt and they keep adding $5,000 to $10,000 a year to that, or they use their house as an ATM machine and every 3 years refinance it to pay off the debts, but then don't change their habits. Those people cannot be coached. They cannot be reconditioned. But I tell everybody that this is an important concept. And it is far wiser for me to educate you as to the possibilities that are available to you, so that when you get your financial house in order, you're the first person to know that you can do this, and hopefully I'm the second person that you let know. So it's always important for people to have this in their mind, than not to know it existed and lose the opportunity to use it.
So we talked about that it's boring. So it just gets that tax efficient compound growth year after year. It's not the roller coaster that the stock market is.
Now it's exciting for us,
but it can make.
But it's boring.
Yeah, it's boring for the money. The growth is kind of boring, but it can make your life exciting, I guess is a good way to look at it. You can't change the mind of everyone. Some people are stuck in their ways, and they'll continue to do things the way that they're doing them. So we realize this is a process. It's not a product, but it is a process, and it does take some changing. The other thing that we see is the lack of education out there. This is something you don't get at the bank unless you're uber wealthy, like 5 million plus sometimes. But in a lot of times we see that the advisors that do talk about this, which is a very few, will then usually set it up very insurance heavy versus making it as efficient as possible. We also talked about that it's not for everyone. You have to have some liquid cash or the ability, some cash flow to partake in this process, to become your own bank. How can, someone watching this, how can they get more information? What steps would you tell them to take right now?
If you've already made the first step, and that is you're questioning whether or not what you thought to be true is actually true, you understand that there is a problem and you're looking for a solution. You are on the step in the right direction. You have to continually educate yourself regarding what infinite banking is. Watching our videos, our website, getting in touch with an authorized practitioner who's going to be a coach with you for the rest of your life. Those are the steps you need to take.
And here we are to help you grow, control, and protect what you build instead of giving it away to taxes, fees, losses, the unknown. Reach out to IBCanadaGroup.com. .ca works as well. There's a ton of valuable information on there, and there's a link to reach out to an advisor that is in your area. Scott, all the best, man. Always learn a ton from you, man. And looking forward to our next conversation.
IBCanada Group, your independent authority for information on the infinite banking concept.